Welcome to Entrepreneurial Edge. If you don't like complicated investment strategies but still want to grow your wealth, then this video is for you. Don't forget to like this video and subscribe to our channel for more insights. Warren Buffett, a name synonymous with investment acumen, has consistently championed the simplicity and efficacy of investing in the S&P 500. This index, a collection of America's 500 largest companies, represents a broad swath of the U.S. economy. Buffett's investment philosophy centers on identifying strong businesses and holding them for the long term. He recognizes the S&P 500 as a reflection of America's enduring economic strength. Buffett's endorsement of the S&P 500, particularly through low-cost index funds like the Vanguard S&P 500 ETF, VOO, speaks volumes about its potential for steady long-term growth. He views this approach as superior to trying to time the market or pick individual stocks, strategies fraught with uncertainty and risk. His philosophy resonates deeply with both seasoned investors and those just beginning their financial journeys. This straightforward approach, devoid of complex financial maneuvering, has become synonymous with Buffett's investment strategy. He believes in the inherent resilience of the American economy and the S&P 500's capacity to weather market fluctuations. This perspective has led countless investors to embrace the S&P 500 as a cornerstone of their portfolios, seeking to replicate Buffett's long-term success. Exchange-traded funds, better known as ETFs, have revolutionized the investment landscape, providing investors with a simple yet powerful tool to access a wide array of assets. An ETF is essentially a basket of securities, stocks, bonds, or other assets that trade on stock exchanges, much like individual stocks. This unique structure allows investors to gain exposure to a diversified portfolio of assets through a single investment. One of the most compelling advantages of ETFs lies in their inherent diversification. By investing in an ETF, you instantly spread your risk across multiple holdings, mitigating the volatility associated with owning individual stocks. This diversification acts as a buffer, potentially softening the blow of a downturn in any single sector or company. Furthermore, ETFs are renowned for their low expense ratios. These ratios represent the annual fees charged by fund managers to cover administrative and operational costs. Compared to actively managed mutual funds, ETFs typically boast significantly lower expense ratios, leaving more of your returns in your pocket. This cost-effectiveness makes ETFs a particularly attractive option for long-term investors, as even small differences in fees can significantly impact overall returns over time. Among the plethora of investment vehicles available, Warren Buffett prefers the Vanguard S&P 500 ETF, VOO, for both novice and experienced investors. This ETF offers a straightforward way to track the S&P 500 index. It provides broad market exposure, low costs, and potential for long-term appreciation. VOO aligns with Buffett's philosophy of buying and holding high-quality companies. The Vanguard S&P 500 ETF, known as VOO, stands out for its simplicity and robust fundamentals. VOO's key strength is its inflation-resistant nature. It offers exposure to dividend aristocrats, companies with a history of increasing dividends. VOO boasts a low expense ratio of 0.03%. This cost-effectiveness allows investors to keep more of their money working for them. Turning $100,000 into $3 million might seem like a daunting task, but with a disciplined approach and the power of compounding, it becomes an achievable goal. The Vanguard S&P 500 ETF, VOO, with its historical performance and potential for long-term growth, can serve as a reliable vehicle for this journey. Assuming an average annual return of 10%, in line with the S&P 500's historical average, and reinvesting all dividends, let's break down how this transformation can unfold. Starting with an initial investment of $100,000 in VOO, and factoring in the power of compounding, your investment could potentially double in value approximately every 7 years. This means that in 14 years, your investment could reach $400,000, and by year 21, it could potentially reach $800,000. Continuing on this trajectory, within 28 years, your initial investment could reach the impressive milestone of $1.6 million. By year 30, with consistent growth and the magic of compounding, your investment could potentially surpass the $3 million mark. The phenomenal growth illustrated in the 100,000 to 3 million journey with VOO underscores the awe-inspiring power of compounding. Often referred to as the eighth wonder of the world, compounding essentially means earning returns on your initial investment as well as on any returns that are reinvested. Over time, even small amounts of money can grow exponentially. Imagine a snowball rolling down a hill. As it rolls, it picks up more snow, growing larger and larger. Compounding works in a similar fashion. As your investment earns returns, those returns are reinvested, and they, in turn, generate their own returns. This snowball effect, amplified over time, is what allows seemingly modest investments to blossom into significant wealth. In the context of VOO, compounding is further enhanced by the ETF's dividend payouts. By reinvesting these dividends, you are essentially buying more shares of VEO, which then generate more dividends, creating a virtuous cycle of growth. The journey from 100,000 to 3 million using VOO highlights the potential of ETFs as powerful tools for long-term wealth creation. ETFs, with their inherent diversification, low costs, and ease of trading, empower investors to participate in the market's growth without the complexities of stock picking or market timing. By aligning your investment strategy with your financial goals, time horizon, and risk tolerance, ETFs can become valuable allies in your quest for financial security. Remember, the key to successful investing lies in patience, discipline, and a long-term perspective. Avoid being swayed by short-term market fluctuations and focus on the steady, consistent growth that ETFs like VEO can provide. As you embark on your investment journey, remember that knowledge is your most valuable asset. Take the time to research different ETFs, understand their underlying holdings, and choose those that align with your investment objectives. By embracing a disciplined approach and harnessing the power of ETFs, you can pave the way for a more secure and prosperous financial future. Thank you for watching Entrepreneurial Edge. If you found this video helpful, please like and subscribe to our channel for more insights on achieving financial success.